Good evening. Welcome to this wonderful chapter, Accounting Standard 16 Borrowing Cost. One more time. In the previous lecture, we have seen some of the very basic calculations of this chapter, how to calculate weighted average rate, how to calculate the capitalization rate, how to calculate the borrowing cost to be capitalized in case of general borrowing and in case of specific borrowing. So what happens when we capitalize the borrowing cost? When we capitalize the borrowing cost, the carrying amount of the asset goes up. When we capitalize the borrowing cost, the carrying amount of the asset goes up. This is the cost of the asset. You have capitalized borrowing cost. So after capitalization of borrowing cost, the cost of the asset goes up. But at the same time, the standard says it should not exceed the recoverable amount. Suppose the recoverable amount is given in AS28. This is recoverable amount. So carrying amount has exceeded the recoverable amount by this amount, which I am highlighting right now. So if it is a fixed asset, then we call it recoverable amount, and if it is a inventory item, we call it as a net realizable value. We call it as a net realizable value. So what the standard says, in case if recoverable amount, if the carrying amount after adding borrowing cost exceeds the recoverable amount, this excess will be transferred to P&L account. This excess amount will be transferred to profit and loss account. Because by adding borrowing cost, I cannot show asset above either recoverable amount or net realizable value. Okay. So AS2 says cost or NRV, whichever is lower. And when you will study AS28, which is not in the syllabus, AS28 is about impairment of asset. Even this standard says carrying amount should not be more than recoverable amount. If carrying amount is more than recoverable amount, we need to write it down. Okay. So this is the concept. This is printed in paragraph number 8 in your book. Para 8 of your book. So no need to write. Most of the things I have given in the notes. Our time should be spent on understanding. So what I'll do on this point, again I will take an important question, write down. Very important question. Question and answer, both we will write down in the notebook. This question is not there in your book, but it is important for understanding of this concept of borrowing cost. And plus in this question we will also see that carrying amount should not exceed the recoverable amount. Okay, ready? Write down. Question. Question is A Limited started construction of building. A Limited started construction of building on 1/4/2022. A Limited started construction of building on 1/4/2022. It incurred following expenditure. It incurred following expenditure. It incurred following expenditure. Now write down date and expenditure in rupees. You will see, like one previous question, expenditure is incurred on various dates. Expenditure is being incurred on various dates. So please write down date and expenditure. Date and expenditure. date and expenditure. Date 1/4/2022, write down fast. 1/4/2022, 1 lakh. 1/7/2022, 2 lakh. 1/8/2022, 3 lakh. 1/2/2023, 5 lakh. 1/7/2023, 2 lakh. 1/8/2023, 3 lakh. Building was ready for use on 30th September 2023. Building was ready for use on 30th September 2023. A Limited had 9% debenture outstanding rupees 20 lakh. A Limited had 9% debenture outstanding rupees 20 lakh, whose funds were used for construction. 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 Recoverable amount of building. Recoverable amount of building on 30th September 2023. Recoverable amount of building on 30th September 2023 is 16 lakh 50,000. Is 16 lakh 50,000. So this adjustment we will see later. Recoverable amount is 16 lakh 50,000. After capitalizing borrowing cost, the carrying amount should not be more than recoverable amount. Calculate the borrowing cost and its treatment. 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 Now you see this question again. The construction started on 1/4/22, but the construction was completed on 30th September 23, which means there is one year ending date will also come, 31st March 23, a new type of question. In most of the previous question, you have done calculation for 1 year only. In this question, we'll have to do calculation for first 1 year, and again we'll have to do calculation for 6 months. Total time taken for construction activity is 18 months. Second point, this is a question of general borrowing. The company had 9% debenture outstanding, and out of that, they have used the funds for the purpose of this construction activity. That means the debenture was not issued for construction of building. However, the funds were used for construction of building also. So it is a general borrowing. So the good part is that there is only one source of borrowing, 9% debenture, and therefore you don't have to calculate the weighted average borrowing rate, or you don't have to calculate the capitalization rate. So that is one easy part. After the building will be completed, we will calculate the total carrying amount of building. Total carrying amount of building will be this expenditure plus the borrowing cost capitalized. and that I will compare with 16,50,000, and if this total exceeds 16,50,000, I will write down the excess amount. Is it right? So that is the concept. But how to apply it in practice? Write down step 1. So this answer we will write in detail. This will help you in conceptual clarity one more time. Please write down little fast. Step 1, check, is there a borrowing cost? Is there a borrowing cost? So the answer you will say yes, 9% debenture of rupees 20 lakh. In order to apply this standard, we need to check that there must be a borrowing. There must be a borrowing cost, otherwise the standard is not applicable. If they would have given 9% preference share or equity share were issued, then this question was invalid. Then I will not capitalize the borrowing cost. So 9% debenture of 20 lakh. So there is a borrowing, interest rate is 9%. Step 2. Now second thing we have to see that the expenditure is incurred on a qualifying asset. Step number 2, check whether the building is a qualifying asset. Check whether building is a qualifying asset. What do you think? Is building in this example a qualifying asset? It is taking 18 months to complete. So you will say yes. Yes. Building construction was started on 1/4/2022 and completed on 30th September 2023 and completed on 30th September 2023. That is 18 months. That is 18 months. Hence, it is a qualifying asset. Hence, it is a qualifying asset. In the exam, now this is for exam oriented student. In exam, assume qualifying asset even if it takes less than 12 months. In the exam, assume qualifying asset even if it takes less than 12 months. So when a question of this nature appears, and suppose the work gets completed in 9 months or 8 months or 10 months, the student will assume qualifying asset. Okay. But in this question, no problem because it is 18 months. Step number 3, whether borrowing cost will be capitalized. So the answer is yes. AS 16 allows capitalization. Will borrowing cost be capitalized? Will borrowing cost be capitalized? The answer is yes. AS 16 allows capitalization. AS 16 allows capitalization. AS 16 allows capitalization. Borrowing cost can be measured reliably. An asset will generate future economic benefit. Now, this is called thinking process. Before you start applying the standard, mentally we have to apply these steps mentally, not for exam. We don't have time in the exam, but mentally we have to see whether this question will come under accounting standard 16 or not. There must be a borrowing cost, there must be a qualifying asset, borrowing cost can be measured reliably, and the asset will generate future economic benefit. Now this borrowing cost is eligible for capitalization. In the exam, your actual answer should start from here. Step 4. This question has two parts. First year, second year. We will do calculation year by year. because we have to close the books of account after every 12 months. So therefore, for first year, we will do the calculation separately. Second year, we'll do calculation separately. So write down year 22-23. Year 22-23. First, we will calculate average expenditure because the expenditure was incurred at different point of time and different amounts were spent. So there are two ways to calculate the borrowing cost. One is to multiply average expenditure into capitalization rate, or other is to calculate the borrowing cost for every expenditure incurred. Answer will be same. So we will follow this simple trick: date, calculation, amount. Question should be in front of you. 1/4/2022, 1 lakh into 12 by 12, 1 lakh into 12 by 12, 1 lakh rupees. 1 lakh into 12 by 12, 1 lakh rupees. Next expenditure was incurred on 1st July 2022. 1st July 2022, we have incurred 9 lakh. So the interest will be calculated from 1st July to 31st March 23, 9 months. 9 months. So 2 lakh into 9 by 12, 1,50,000. Then we have incurred expenditure on 1/8/22. So how many months gap is there? 1/8/22 to 31st March 23, 8 months gap is there. So you will write 3 lakh into 8 by 12. Multiply 3 lakh into 8 by 12. Please give me the answer. Please give me the answer. 3 lakh into 8 by 12. How much is the answer? 2 lakh. Next expenditure was incurred here, 1st February 23. Now there is a gap of 2 months only. So you will take 5 lakh into 2 by 12. Yes, give me the answer. Come on, 5 lakh into 2 by 12. That comes to 83,333. Other expenditure were incurred in the next year. So what you do, take the total of the last column. Pawar is right. Total of this last column, this is my average expenditure. Come on. Quickly. Average expenditure 5,33,333. 533,333. These all have already been multiplied by the time factor. Now we just need to multiply by the interest rate, and that will give me the borrowing cost to be capitalized for first year. So point number B, write down. Point number B, Tanya is right. Calculation of expenditure to be capitalized. Calculation of expenditure to be capitalized. Everybody, how do you calculate the expenditure to be capitalized? Or you can say calculation of interest to be capitalized. This will be more appropriate. Calculation of interest to be capitalized. Average expenditure into 9%. Multiply 9% of 533,333 is how much? 9% of this amount is how much? This is equal to 48,000. This is one way to calculate the interest cost to be capitalized, where we first calculate the average expenditure and just multiply by 9%. Alternatively, what you can do, for every expenditure incurred, for every line you can calculate the interest. Okay. Point number C, write down. Point number C, please round off to 48,000. No need to write in fraction. Point number C, write down. Total cost of building at the year end. So now what will happen in the next year, or what will happen at year end? The total amount you have incurred 11 lakh. You can just add those four numbers, 11 lakh, and plus this 48,000 also we will capitalize. Plus 48,000 also we will capitalize. Plus 48,000. So that means the building at the end of year 1 will appear as capital WIP. Capital WIP means the work has not yet been completed. 11,48,000. And this will become opening balance for the next year calculation. This will become opening balance for the next year calculation. Okay. Now, I will tell you one more thing for understanding. This 48,000 can be calculated by one alternative method also. Write down, alternatively, borrowing cost can be calculated as follows. Alternatively, borrowing cost can be calculated as follows. So the benefit is this: whatever method you like easy, you can follow that. Here, for every expenditure incurred, we will directly calculate the borrowing cost. Four columns: date, amount, months, interest at the rate of 9%. Date 1/4/2022, amount 1 lakh, amount 1 lakh. Now on this we will calculate interest for full 12 months from 1/4/22 to 31st March 23 at 9%. So that comes to 9,000, right? Then next is 1/7/22, 2 lakh. From 1/7/22 to 31st March is 9 months. So here I will calculate interest for 9 months, which is 13,500, which is 13,500. Then 1/8/22, 3 lakh. On this we will calculate interest for 8 months. 3 lakh into 9% into 8 by 12, 18,000. Check the answer. Then we have 1/2/2023, 5 lakh. Now here we will calculate interest for 2 months only. 7,500. 7,500. 7,500. Take the total of the last column and you will be happy to note that the interest in the last column is also 48,000. So if you like this method, you can follow this. If you like earlier method, you can follow that. You'll get the same answer if you do the calculations properly. Okay. So write down note. What about the depreciation? Right now the building is not complete. Building is under a work in progress. Therefore, no depreciation will be charged. Please write a note because you will ask this query later. What about the depreciation? So you will write, since building is under capital WIP, Since building is under capital WIP, no depreciation will be charged. No depreciation will be charged. No depreciation will be charged. Up to this is year 1. Now write down step 5 for the year 23-24. For the year 23-24. So now we are entering into second year. You will see this is the only question we have solved till now where we are entering into second year. Earlier problem, the question got over in 1 year itself. In the next year, again we will repeat the same thing. Calculation of average expenditure. Calculation of average expenditure. Either you can follow average expenditure method or you can calculate borrowing cost for each item. Date, calculation, amount. Date column, opening balance. Date column, opening balance. Now in this question, we are here opening 1/4/23 and the work got over on 30th September 23. So we have to count only up to this date. So this gap is 6 months. This gap is 6 months. So I have taken 6/12. Why 12? Because interest rate is per annum. Interest rate given is 9% per annum. So when you are calculating interest for 6 months, it will be 6/12. That is the simple logic. Because interest rate I am going to apply is 9% on this amount, which is 9% per annum. So for 6 months, the interest will be 11,48,000 into 6/12 into 9%. On opening balance also we will calculate the interest in the second year because our funds have got invested in that. And opening balance will include the interest cost previously capitalized. Opening balance will include interest cost previously capitalized also because that also becomes part of the capital WIP. That also becomes part of the capital WIP. So that also we will consider. Interest capitalized in earlier year also becomes part of the expenditure incurred on a qualifying asset. Then write down on 1/7/23 you have incurred 2 lakh. Now the gap is 3 months. So we will take 3 months. 2 lakh into 3/12 multiply, you get 50,000. And there is one more expenditure on 1st August 23, August and September 2 months. You have incurred 3 lakh. 3 lakh into 2/12, 50,000. 3 lakh into 2/12, 50,000. So the total expenditure, average expenditure for this year, the total average expenditure for this year is 6,74,000. 6,74,000. That is my average expenditure. 6,74,000. Many times the student will wonder why we have taken 6 months, 3 months, 2 months. So for the benefit of such student, as the work got over on 30th September, our calculation will be only up to 30th September 23. So please write a note before you forget. The construction was completed. The construction was completed on 30th September 2023. The construction was completed on 30th September 2023. Hence, for calculating the number of months, Hence, for calculating the number of months, go up to go up to 30th September 2023. Go up to 30th September 2023. Go up to 30th September 2023. Then write down second note, because you will have a query why we have taken 11,48,000. The standard itself says that if any borrowing cost is capitalized previously, any borrowing cost which is capitalized previously will also become part of expenditure on qualifying asset. So write down, note, interest cost capitalized previously, interest cost capitalized previously will also be part of expenditure incurred on qualifying asset, will also be part of expenditure incurred on qualifying asset, will also be part of expenditure incurred on qualifying asset. Will also be a part of expenditure incurred on qualifying asset. Now write down next point B, interest to be capitalized. Interest to be capitalized, take the previous answer, 6,74,000 into 9%. Into 9% directly. Do not multiply by 6 by 12. While calculating the average expenditure, already the effect of time has been given. Do not further multiply by 6 by 12 or anything. The time period has already been considered in 6,74,000. So the answer is, for the second year, we will capitalize 60,660. For the second year, we will capitalize 60,660. Now write total cost of building. Total cost of building. Total cost of building will become, last year closing was 11,48,000. This year we have incurred expenditure on construction work 2 lakh rupees and 3 lakh rupees, plus this borrowing cost will also get capitalized. Plus this borrowing cost will also get capitalized. So my total carrying amount of building, come on, is equal to how much? What is the total carrying amount of building? Add these numbers and give me the final answer. The total carrying amount of building will be how much? Calculate and tell me. This seems to be 17 lakh something. 17 lakh 8,660. The total cost is 17 lakh 8,660. Oh my God, there is a problem now. This is the carrying amount, but it is more than recoverable amount. It is more than recoverable amount. Since it is more than recoverable amount, we will have to write it down to its recoverable amount. Okay, so some write down will be required because the carrying amount has exceeded the recoverable amount. So write down journal entry, and in journal entry we will pass an entry for writing down the carrying amount of this building. So entry would be on 30th September 23, format of journal, date, particulars, debit, credit. Date, particulars, debit, credit. So today 30th September 23, the building has been completed. So we will write building account debit first as per your calculation, 17 lakh 8,660 to building capital WIP. So from capital WIP, we are shifting it to PPE now, and it is ready for being depreciation also. So that is 17 lakh 8,660. So you will say being building capitalized, being building capitalized. But what we have learned in paragraph number 8, if the carrying amount exceeds the recoverable amount, then the company will have to provide for impairment loss. Impairment loss means reduction in the value. An impairment loss will be charged to P&L account. So one more entry will have to pass. One more entry have to pass. 30th September 23. Impairment loss in bracket P&L account debit. Anybody amount. What will be amount here? Amount will be equal to difference between the carrying amount and recoverable amount. What will be the amount? Calculate amount and tell me. The amount will be 17 lakh 8,660 minus 16 lakh 50,000. Rajendra is right. 58,660. Credit will be to accumulated impairment loss. To accumulated impairment loss, Sanket is right. 58,660. 58,660 being impairment loss charged. Being impairment loss charged. So on every concept we are taking question. If such questions are asked in the exam, you should be able to handle it. Okay. So this is the answer of this question. Any query till now? If you have a query, ask me. Yes, any query? Okay. What I'll do, I'll give you some important notes. Write down important notes. Important note number one. Important note number one. Depreciation will be charged on rupees 16 lakh 50,000 because the asset is ready. But the carrying amount is now after impairment loss, carrying amount is 16 lakh 50,000. So you will say depreciation will be charged on rupees 16 lakh 50,000 for 6 months for the year ended 31st March 2024. Although they have not given the rate of depreciation, if they give you rate of depreciation, then take this, take half year depreciation. Second note, write down, note number 2, in practical life, expenditure may be incurred daily. Yes or no? If you are doing construction of a building, the expenditure is incurred every day, not at the beginning of month and after a gap of 3 months or 4 months. Every day some labor, some material, some other expense will be incurred. So if the question gives you in terms of days, this question has not yet been asked, but in future they may ask you, they may give you 27th April, 18th July, then in that case calculation will be done in terms of number of days. Calculation will be done in terms of number of days. Then your question will be, what about borrowing cost after 30th September 23? Answer is simple. Borrowing cost incurred after 30th September 23. Borrowing cost incurred after 30th September 2023 will be recognized in will be recognized in profit and loss account, will be recognized in profit and loss account, will be recognized in profit and loss account. Borrowing cost incurred after 30th September 2023 will be recognized in profit and loss account. Note number 4, right? Debenture was not specifically issued for construction. Debenture was not issued specifically for construction. It was your existing debenture. Hence, general borrowing. Hence, general borrowing. Otherwise, you will apply the concept of specific borrowing. In specific borrowing, actual expenditure, actual interest is capitalized. So, all this calculation will not be required only. Total interest cost incurred will be capitalized. Hence, general borrowing. So tell me, did you enjoy this question? A very different type of question for conceptual clarity. Those who have enjoyed will say yes, yes, yes. Paragraph number 9 in your book. Come to para 9 in your book. What is paragraph 9? Commencement of capitalization. When should capitalization begin? What is the point of time when the capitalization should start? Okay, so now standard says when all the following three conditions are satisfied, all the following three conditions are satisfied, that is the point of time when borrowing cost will start getting capitalized. Okay, three conditions must be satisfied. When all three are satisfied, then we can start capitalizing borrowing cost. So first condition is expenditure on acquisition, construction or production of a qualifying asset is being incurred. So first is there must be an expenditure on qualifying asset being incurred. So first condition is you must have some or the other expenditure incurred on a qualifying asset. If you are only thinking of incurring a capital expenditure, you are thinking I am going to buy a land, then you will not start capitalizing. You must incur expenditure on qualifying asset. Second is, we have written this note also in this previous question, borrowing cost must be incurred. If there is no borrowing cost, if there is no borrowing cost, where is the question of capitalization? If expenditure on qualifying asset was incurred on 1st April, but you have taken a loan on 1st of May, you will capitalize borrowing cost from 1st May only. And the third thing they are saying is activity necessary to prepare the asset for its intended use or sale are in progress. Activity. So you have taken some, for example, land. You have to construct a building over this. So what it says, all those activities which are required to convert land into building, like leveling of the land, cleaning, design, administration work, and so many other activity which are required, they must be in progress. They must be in progress. Then we will allow you to capitalize the borrowing cost. If you have suppose taken loan on 1st April 23, you purchased a land on 1st May 23, but the activities which are required to complete this qualifying asset started on 1st June 23, then you can capitalize the borrowing cost only from 1st June 23, and the borrowing cost incurred in this period will be charged to, this period from the date of taking loan till the activity started. During this period, the borrowing cost will be charged to profit and loss account. So all three conditions got satisfied on 1st June. From 1st June, we will capitalize the borrowing cost. Before that, if any borrowing cost is incurred, you will charge to profit and loss account. Now the next important point is what will be included in expenditure on a qualifying asset. Because we have solved about 6 or 7 questions, you have multiplied average expenditure into capitalization rate. This is the formula you have used, or you have used this formula, expenditure into capitalization rate into number of months divided by 12. Either of the two formula you can use, both are same. Then the question is, what will be included in expenditure? What comprises of expenditure on qualifying asset? So the standard says, paragraph number 10 in your book, tick mark, paragraph number 10, tick. Expenditure on qualifying asset will include those expenditure that has resulted in payment of cash. Like for example, when you buy material, labor, okay, or other expenses, so that will be considered. It will include transfer of any other asset also. So if you have used your own asset in the construction, transfer of other asset can be used for construction. Even that will be considered. So if you have some building construction material with you, which you have used for construction of a building, that will also be considered. Or any assumption of interest bearing liability, or suppose for example you have incurred or you have issued debenture, you have issued debenture for the purpose of buying material. So assumption of any interest bearing liability, you might have taken loan or taken credit for buying material, that will also be considered. And tick mark, which we have seen in the previous question, if borrowing cost is previously capitalized, then for the next accounting year, that will also be treated as expenditure incurred on qualifying asset. So refer previous example for this. Refer previous example for this, where we have added the borrowing cost in the first year, and that was also included in the opening balance for the purpose of calculation of borrowing cost of second year, and it should be reduced by, so this you will add. Most of the exam question I have seen will cover only either A and D. Sometimes they give you adjustment of B also, most of the question, and you have to deduct any progress payment received. This is the expenditure you have incurred, suppose 20 lakh, but you might have received some progress payment also. Like if you are doing construction of a building, then the client or contractee gives you some advance payment. So the standard is saying, suppose 10 lakh has already been recovered from the client, so your net expenditure is not 20 lakh, 20 minus 10, what you have put from your pocket. To construct this building, I require 20 lakh. 10 lakh has been financed by the client, so my expenditure is only 10 lakh. That means 10 lakh was funded out of borrowed money. And similarly, if any grant has been received in connection with the asset, suppose 2 lakh rupees grant has also been received, my total gross expenditure is 20 lakh. Out of that, 12 lakh has already been funded by the client or the government. So my expenditure is only 8 lakh, and I will use 8 lakh into whatever capitalization rate to calculate the borrowing cost to be capitalized. So once again revise, what is expenditure on qualifying asset? Those which have resulted in payment of cash, transfer of other asset, assumption of any interest bearing liability, borrowing cost previously capitalized, and from that you deduct any progress payment received and any grant received in connection with the asset, means specifically with respect to that asset. Government grant is another chapter which we have covered in AS12. So if the grant is in connection with the asset, then it will be deducted. The logic is, this is what we have spent, this much is already funded by client or the government, so only net amount is financed out of borrowed funds, and therefore only on this net amount we are going to apply the standard. Okay, so there is a question also in our book on this point. This question is printed in your book, question number 5. After 2 or 3 pages, you will find question number 5. We will solve in the notebook. We will solve in the notebook. Okay. Following information is available from the records of A Limited in respect of a project which started on 1st January 2003. Capital expenditure incurred on the project till 31st December 2003 is 8 lakh. This is the expenditure incurred. Borrowing from the bank at 15% with effect from 1st January 2003 is 3 lakh, and during this period you have taken a loan of 3 lakh rupees at 15%. Then what happened? Asset transferred to the project during the year 2004. Now this is year 2004. So you have one asset transferred. Asset transferred will also be added in the expenditure, 2 lakh. Plus you have also incurred expenditure 1,25,000. In second year, you received progress payment. This is progress payment from the client, 8,20,000, and you have borrowed additional amount for the project at 16%. One more loan was taken, but it is for the project. It is for the project, so a specific loan. This is also specific loan, 2 lakh rupees. Find out the borrowing cost to be capitalized during the year 2003 and 4. So this is again a 2-year problem. We have to find out how much borrowing cost will be capitalized in year 1 and how much borrowing cost can be capitalized in the year 2. Is it right? Say yes. Yes. So we will solve in the book only. I think in your book the answer is there. In your book the answer is already printed. So you can just check it from there. Later on you will solve in the notebook. So if you look at your book, year 2003 is simple. In year 2003, the expenditure incurred is 8 lakh, but your borrowing is only 3 lakh. But your borrowing is only 3 lakh, and your interest paid at the rate of 15% will be 45,000. So I am going to simply say rupees 45,000 will be capitalized, full amount, rupees 45,000, because that is your borrowing cost incurred. Do not multiply by 8 lakh. Then when I come to year 2004, in year 2004, my opening balance will be 8 lakh plus borrowing cost previously capitalized. So my opening balance will be expenditure incurred in 2003 plus borrowing cost previously capitalized. So when I start my year 2, 2004, I will have an opening capital WIP of 8,45,000, and in this year we have transferred one asset transferred to the project was 2 lakh, and some expenditure incurred on construction work was 1,25,000. But what happened? We also received progress payment. We also received some progress payment, which was 8,20,000. So now, really speaking, my net expenditure is 3,50,000. Oh my God, my net expenditure is 3,50,000. My net expenditure is 3,50,000. What about my borrowing? I have two borrowing. I have first borrowing 3 lakh rupees, and then I have taken one second borrowing also. This year we have borrowed another 2 lakh. Oh my God. So my borrowing is more than my net expenditure. I can't capitalize interest on 5 lakh rupees when my expenditure itself is 3 lakh 50,000. So in that case, my borrowing is more, my net expenditure is less. So I am only going to capitalize the proportionate interest, not the full interest. I am only going to capitalize the proportionate interest part. So what will that be? So first you calculate the total interest. Total interest will be on 3 lakh at 15% and plus on 2 lakh at 16%. So somebody will give me the answer. Total interest spent is 77,000 rupees. Total interest spent is 77,000 rupees. Therefore, borrowing cost to be capitalized will be 3,50,000 divided by 5 lakh into 77,000, proportionate amount. The borrowing cost I will capitalize will be, this comes to how much? 53,900. Check the answer. 53,900. So in case of question like this, you have to calculate the borrowing cost to be capitalized by first finding out the net expenditure. In this example, the net expenditure is below your loan. So take the proportionate amount, and how much amount will be transferred to P&L account. Come on, Tanya, P&L account. actual borrowing cost incurred 77,000, but to be capitalized 53,900 only. So remaining amount 23,100 will be transferred to P&L account. Remaining amount 23,100 will be transferred to P&L account. Remaining amount 23,100 will be transferred to P&L account. Only one query can come in your mind. Why we have not calculated interest on interest also? Because first year interest was 45,000. So second year the interest could have been paid on 45,000 also. Your query is right. But we apply compound interest only when the previous year interest has not been paid. So in your book I have written an assumption that it is assumed that interest of rupees 45,000 has already been paid in the last year. Interest of rupees 45,000 has already been paid in the last year. Since interest has been paid, then in the calculation of total interest below, we will not consider interest on interest. But suppose you assume this interest of 45,000 was not paid in the last year, then yes, in the second year, while calculating the total interest, interest on 45,000 will also be considered. Right. So this is another example on borrowing cost. Come back to your notes. We are almost towards the end of this chapter. 15 to 20 minutes more. Have patience. Paragraph number 11. Paragraph 11. What is paragraph 11? Suspension of capitalization. Suspension. What do you mean by suspension? Suspension means, write down there, temporary stoppage. Suspension means temporary stoppage of work. Temporary stoppage of capitalization of borrowing cost. Temporary stoppage of capitalization of borrowing cost. Okay. So first you understand planned period. You can write in your book or notebook. In planned period, continue to capitalize borrowing cost. Planned period means we have planned that this building will be constructed in 1 year. We have decided this building will be constructed in 1 year. So my plan period is 1 year. In 1 year, this building will be constructed. So for during planned period, continue to capitalize the borrowing cost. So for planned period, don't worry, because I had mentally made up my mind that this would require 1 year. Then second one is called extended period. Extended period means beyond planned period. Beyond planned period. So I had planned 12 months, but suppose it got stretched up to 18 months. Normally it happens. You will also observe when you are constructing your house or doing interior work of your house, you may think we will take 3 months, but actually you end up taking 4 months, 6 months, like that. That is called extended period. When the work gets extended beyond the planned period. Now, if it is extended period, then during extended period, we will suspend capitalization of borrowing cost. So refer diagram on the screen. For extension period, Refer diagram. This diagram you can also draw if you want. Good student would have drawn it by now. During extended period, it is written in your book also, capitalization of borrowing cost should be suspended during extended period in which active development is interrupted, which is avoidable. Okay, so I am going to repeat again. During planned period, continue to capitalize the borrowing cost. During planned period, continue to capitalize borrowing cost. During extended period, when the work gets extended beyond planned period, if there is stoppage of work, there is a stoppage of work, activity is not happening, then do not capitalize the borrowing cost if it is due to avoidable reason. If it is due to avoidable reason, we are constructing this building. Laborer have gone on strike. Laborer gone on strike. Laborers have gone on strike. And then 3 months, no activity took place. Activity must be in progress to convert your capital WIP into your PPE or to convert WIP into inventory. But for 3 months, there was a strike, no activity happened. Strike is an avoidable event. Strike is an avoidable event because you have to plan your relationship with workers in advance. So therefore, in this 3 months period, we will incur borrowing cost. Bank will charge me borrowing cost, but during this period, whatever borrowing cost I will pay, I will charge to P&L account. I will not capitalize. So if during extended period, the activity is not happening due to avoidable reason, those which could have been avoided, borrowing cost will be charged to P&L account. But suppose we are constructing this bridge on a river and then there is a heavy rainfall, water level goes up, water level goes up, water level goes up. So what will happen now? For 2 to 3 months, the activity was stopped. Activity was stopped. Now this is called unavoidable reason. This is called unavoidable reason. Suppose this was from 1st July 23 to 30th September 23. Bank is going to charge you interest. Bank is not bothered. Bank is not bothered. Bank is going to charge you interest. The standard says if during extended period, if the activity stops because of unavoidable reason, you will continue to capitalize the borrowing cost. You will continue to capitalize the borrowing cost. Is it right? You will continue to capitalize the borrowing cost. So I think I have made myself clear. Just to summarize, during planned period, all borrowing costs will be capitalized. During extended period, if the activity is not happening due to avoidable reason, do not capitalize the borrowing cost. If the activity is not in progress due to unavoidable reason, you will continue to capitalize the borrowing cost. So when the active development is interrupted over underline extended period for reasons which are avoidable, then in that case do not capitalize borrowing cost. Temporary delays which are not necessary for getting the asset ready. So these are avoidable reason. For example, strike is an avoidable reason. Shortage of funds is an avoidable reason. You don't have money, therefore you have to stop the work. It is avoidable, man-made problem. Man-made problems are avoidable. Okay. But if there is a flood, then we have to stop the work. There is a heavy rainfall, we have to stop the work. That is unavoidable and we will capitalize the borrowing cost. Okay. See this line, capitalization is not suspended during the period when there is a temporary delay which is necessary for getting the asset ready. Which is necessary for getting the asset ready. For example, let us take the example of a construction of building. So while constructing the building, this is the roof you have to construct. So you will put those concrete thing here, which is initially in a liquid type shape. Then you have to keep it as it is for a few weeks. Then it will become hard. So during this period, we are not doing anything because that is a part of the process. Otherwise, this roof will not be strong. This is necessary for getting the asset ready. Capitalize the borrowing cost. Capitalize the borrowing cost. Or for example, in case of liquor, they need to be stored for some time because storage is also necessary for getting the liquor ready and therefore borrowing cost will be capitalized. So that was about suspension. Paragraph number 12 now. Cessation of capitalization. Cessation means complete stoppage. After this, we will not capitalize the borrowing cost. Suspension means temporary stoppage. Cessation means complete stoppage. You have to guess what is the last date up to which we can capitalize the borrowing cost. What is the last date up to which we should capitalize the borrowing cost? So refer the definition of qualifying asset. Qualifying asset is an asset that necessarily takes substantial period of time to get ready for its intended use or sale. So dear student, again guess. My question you have not yet answered. What is the last date up to which we can capitalize the borrowing cost, and beyond that we will not capitalize the borrowing cost? In the example that we solved today, I have given you a note also. Yes, guess when, up to what date we can capitalize the borrowing cost? Please reply. What do you think? You become a standard setter, suppose. Up to what date you will capitalize the borrowing cost? So the answer is once the asset is substantially ready. Once the asset is substantially ready means now it can be used or you can sell it. So the answer is given in your book, paragraph 12. When substantially all the activities necessary for preparing the asset for its intended use or sale are complete. Okay. So the standard says when substantially all the activities which are necessary to get the asset ready for its intended use or sale are complete. Now suppose this is a building you are constructing. Building is ready. Offices are ready. Interior is ready. Lift is ready. Now why are you waiting? You can start using it. Therefore, you can stop capitalizing the borrowing cost. Suppose this building is ready on 30th September 23. This example we have taken also with this date. So we have a cut-off date. Up to this we will capitalize. After this, P&L account. Why they have used the word substantially here? Substantially all means almost all. Almost all activities are over. If some minor work is pending, ignore it. Okay, it's written in the book also. Sorry. In case of administrative work or finishing work to be completed happen to be minor in nature. Now see, this building is ready. It's a 10-storied building. Only this outer wall is not painted. This is not painted, but otherwise building is ready. Building was ready on 30th September 23. The outer walls were painted on 30th September 24. My question is, building is substantially ready on this date, only outer walls were remaining to be painted, which were painted on 30th September 24. What happens to the borrowing cost incurred in this period? Please reply. What happens to the borrowing cost incurred between 30th September 23 to 30th September 24? On 30th September 23, the building was substantially complete. So the answer is charge to P&L account. Because just by keeping the small minor administrative work pending, company cannot go on capitalizing the borrowing cost forever. So therefore the standard uses the word substantially all. Is it right? One more interesting example. Suppose this stadium has to be constructed. Cost of construction of this stadium is 50 crore rupees. Is it right? And there is a gate here. The whole stadium is constructed. Pavilion is constructed. Ground is ready. Players' dressing room is ready. But this small gate, which will cost 2 lakh rupees to construct, is not ready. Stadium was ready on 30th September 23. This gate was installed on 30th September 24. What happens to the borrowing cost incurred between these two dates? The answer is P&L account. The logic is same. Substantially all the activity necessary to prepare the asset for its intended use or sale are complete. So just by keeping some amount pending, some small item pending, you can't keep on capitalizing the borrowing cost for a very long time. The standard setters are also smart. Okay. Next is when construction is completed in part. Paragraph 13. When construction is completed in parts and the completed part is capable of being used while construction continues for other parts, capitalization of borrowing costs in relation to that part should cease. This is the law, this is the provision of the standard. What it says, suppose this is an amusement park. Have you ever gone to any amusement park, entertainment park, like Disneyland, Imagica, and certain similar Imagica or like that, SL World? Now what happens? There are many buildings in this amusement park. If you go inside, there are many fun activities in different buildings. So let us call it building number A, B, C, D. These are where the games, shows, dance, thrill events happen. Building A and B are complete, opened for public. Public can go, purchase the ticket, and enjoy the show. Building C and D not complete. Building C and D not complete, not opened for public. Suppose you have taken a loan of 100 crore rupees for the whole amusement park. 100 crore for whole amusement park. What the standard says, those parts which are complete and are capable of being used independently, once they are ready and you can use them independently, do not capitalize the borrowing cost. So borrowing cost related to building number A and B not to be capitalized further because they are ready for use. But borrowing cost relating to building number C and D, you will continue to capitalize. Okay. One more example. Suppose there is a process industry. Process industry means output of A becomes input for process B, output of process C becomes input for process D now, and finally from D the final product will emerge. Output of A becomes input for B, output of B becomes input for C, output of C becomes input for D, and from the D, the final output will emerge, which will be sold in the market. A company is constructing this process plant, which has four processes. A is complete, B is complete, C is not complete, D is not complete. Oh my God. Now there is a problem. What is the problem? In this example, unless C and D are also complete, A and B cannot be used independently. A and B can be used only when C and D are also complete. Okay. Therefore, in this example, where unless the entire plant is ready, you can't use it. The standard says continue to capitalize the borrowing cost even though A and B are complete but they cannot be used independently. In my previous example of amusement park, A and B building could have been used independently without waiting for C and D to be complete. But here, unless C and D are complete, A and B also cannot be used. So we will continue to capitalize the borrowing cost for the entire plant. Right? So please come to one question. One more question we will solve on question number 4. When we are constructing many assets together, some of them are complete, some of them are not yet complete. How to capitalize the borrowing cost in such cases? Question number 4, on the next page you will find it. A Limited is establishing an integrated steel plant consisting of 4 phases. So this is an integrated steel plant and it has 4 phases. It is over several years, means it is a qualifying asset, but pending that phase 1 and phase 2, underline phase 1 and phase 2 would be started as soon as they are completed. would be started as soon as they are completed. Following is the detail of the work done on different phases of the plant during the current year. Now understand the question. This question was asked in one of the study material of the institute. So these are four phases of the steel plant: cash expenditure incurred, plant purchase total. So what is relevant for us is the total expenditure. This is expenditure incurred on phase 1, 2, 3 and 4. Okay. And they have taken the total also. So kind, if you add these numbers, you will get 2 crore 66 lakh. Total expenditure incurred 2 crore 66 lakh, and they have taken loan at 16%. The total amount of loan taken was 2 crore 40 lakh. The total amount of loan taken is 2 crore 40 lakhs. Is it right? Loan is a common loan. They have taken one loan, use that loan for four phases. Phase 1 and 2 have become operational. Operational means they can be used. They can be used, which means the borrowing cost relating to phase 1 and phase 2 will be charged to P&L account because they have become operational. And the borrowing cost relating to phase 3 and phase 4, you will continue to capitalize because they are not yet operational. Question is, how much amount will be capitalized and how much amount will be charged to P&L account? Okay. So what I will do, the question is not clear. Out of this 240 crore, how much was the loan taken for phase 1 or phase 2 or phase 3 or phase 4? The breakup of this 240 is not given. So we will assume that this loan was taken proportionately in the ratio of the expenditure incurred. So ultimately, I have to break that loan over four phases. So some basis of allocation must be there. So the basis of allocation of that loan will be the ratio of expenditure incurred. If they specifically mention the amount of loan also for each phase, then my job is simple. I will apply that loan only. But because here the loan is common and there are four phases, I have to apportion the loan over these four phases, right? So let us begin this wonderful question. In your book also, this is a 5-mark question in the exam. Oh my God. You have to fill in the blanks in your book. Those who have the book will start solving. Others can do in the notebook. So write down phase 1, phase 2, phase 3, phase 4. Total expenditure incurred. Write down total expenditure, cash plus plant. Total expenditure incurred 48 lakh, 75 lakh, 55 lakh and 88 lakh. Total expenditure incurred 48 lakh, 75 lakh, 55 lakh and 88 lakh, and then you will apportion the loan amount in the ratio of expenditure. Apportionment of loan amount in the ratio of expenditure. So this time your chance. Take your calculator, apportion 2 crore 40 lakh. Apportion 2 crore 40 lakh in this ratio. Let me see who will give me the answer first. 2 crore 40 lakh you will apportion in the ratio of 48 is to 75 is to 55 is to 80. Only when you will give me the answer, I can proceed further. Yes, start. So the first answer will be 43,30,827. 43,30,827. Try the next one. Try the next one. The next answer would be 67,66,917. Check the answer. 67,66,917. The third answer would be 49,62,406. 49,62,406. 406. And the last will be 79,39,850. 79,39,850. Okay. So once you apportion the loan, now you calculate the interest also accordingly. It means this loan was taken for phase 1, this was for 2, this was for 3, and this was for 4. Interest at the rate of 16%. Calculate 16% of 43,30,827. Yes, answer. Come on, 43,38,27. Interest on phase 1. How much will you write here? 16% will be 6,92,932. 6,92,932. Correct? Similarly, now you multiply phase 2. 16% of 67,66,917. Interest on phase 2. 10,82,707. 10,82,707. Now you try phase 3. Try phase 3. 49,62,406 into 16%. Come on. This comes to 793,985. 793,985. And last one, multiply this into 16%. Last one, 12,70,376. 12,70,376. Check if it is right. Is it right? Yes. So the question was, how much amount will be capitalized? Phase 1, phase 2 have become operational. So the interest relating to phase 1 and phase 2 will be charged to P&L account. Phase 3 and phase 4 are not yet operational. Are not yet operational. So they will be capitalized. So write in bracket P&L account, P&L account, first and second item. These two will be charged to P&L account, and the last two will be capitalized. What we are assuming, phase 1 and phase 2 have become operational at the start of the year. It's written in the book also. Phase 1 and phase 2 have become operational at the start of the year. Why we have written that assumption? So that the whole amount will be charged to P&L account. If the question says phase 1 and phase 2 became operational after 6 months, Suppose we change the question, it becomes operational after 6 months. So half of it will be capitalized and half will go to P&L account. But to keep the question simple, your kind institute has said that it will become operational at the beginning of the year. So this chapter is almost over. Now we will test you. Okay. Suppose this is the project and these are the various time period. These are the various time period and you are incurring borrowing cost in this period. You are incurring borrowing cost in this period, and it is mentioned also here what happened in T1, T2, T3, T4. This I have given in your book also. Okay. Student will have to now answer. Suppose T1 amount is borrowed here and T2 activity to make the asset ready started. So what will be the treatment of borrowing cost between T1 and T2? Activity started only at T2. So the borrowing cost incurred between T1 and T2. Reply, P&L account or capitalize? P&L account or capitalize? T1 interest between T1 and T2. So the answer is P&L account. Okay, try you will try. Between T2 to T3, the activity is in progress. Loan is taken, expenditure is incurred, activity is in progress. What would be the treatment? The small chart will summarize the whole chapter. Yes, T2 to T3. Between T2 to T3, we will capitalize the borrowing cost. We will capitalize the borrowing cost. Then what happened between T3 to T4? Yes, Sanket is right. Capitalize. Unavoidable delay. Unavoidable means we will continue to capitalize. This period is unavoidable delay. What happened between T4 and T5? Between T4 and T5, there was avoidable delay. Avoidable delay. If the work is suspended due to avoidable reason during extended period, the standard says T4 to T5. Come on, P&L account. P&L account. Very good. And what happened after T5 to T6? Activity started again. So the activity started again. Construction work started again. So T5 to T6. Sanket is right. Tanya is right. T5 to T6. Again start capitalizing. Then what happened at the point T6? T6, asset is substantially complete. Oh my God. But you are paying the interest. Even after the asset is complete, you are still paying the interest after that period. T7, the borrowing is fully refunded. So what happens between T6 and T7? T6 and T7, anybody? T6 and T7, the borrowing cost will be charged to P&L account. The borrowing cost will be charged to P&L account. So that was an interesting diagram, yes or no? How many of you liked this interesting diagram for understanding AS16? Did you enjoy this diagram? One small diagram summarizes your AS16, of course not the numerical question, but the conceptual question. Come back to your book. In your book, you will find there is a disclosure requirement also, paragraph 14. Disclosure requirement is just two. One is disclose the accounting policy adopted for borrowing cost. Like many other standard, company will have to disclose accounting policy related to borrowing cost. So whether they capitalize the borrowing cost, whether they charge to P&L account, etc. And next is, if you have capitalized any borrowing cost, then disclose the amount of borrowing cost capitalized during the period. So you have to disclose actually during the year how much amount you have capitalized. Okay, so these are the two disclosure requirements. These are the two disclosure requirements. Now we'll come to question answer. This standard is over. Come to question number 1. 2, 3 theoretical question I will take, and then today's homework, all questions you will solve, all, without sleeping, solve all question, and then this chapter will become permanent in your mind. We have given you so many questions for practice so that your confidence will build up, and these are the questions they will ask you in the exam. So question number 1, there is a part 1, interest on loan from financial institution and a debenture issue made for the purpose of a particular plant amounting to rupees 200 lakh has been capitalized. So this is a loan taken for a particular plant and the interest is capitalized. So whether the accounting policy is correct or not. So you will say answer is also printed. The accounting policy is in line with AS 16. Accounting policy is in line with AS 16. Just write down in bracket, assuming plant is, just write down this much more in answer 1, assuming plant is QA. Assuming plant is QA, qualifying asset. Assuming plant is QA. Because this question is not clear whether this plant was ready to use or it was constructed. Next is interest on bridge loan. Bridge loan means short term loan. Short term loan. Bridge loan is a technical word used in banking companies to denote it's a very short term loan from banks taken for a particular plant amounting to 150 lakh has been capitalized and added to the cost of the project. So total interest is 150 lakh. This interest include 25 lakh appropriated for the funds used for other purpose. Now there is a small problem. Total interest 150. They have capitalized the full amount. But the question says 25 lakh is appropriated for other purpose. So your answer will be this 25 lakh will be charged to P&L account and this 125 lakh will be capitalized. This 125 lakh will be capitalized. The answer is given in your book. Third question, part 3. First question, third part. Interest cost on loan taken for construction of a captive power plant has been capitalized. Captive power plant means for own use. Such power plants are for own use. Okay. The power plant became operational, underline last year. Oh my God. So this accounting treatment is wrong. Why? Because the asset is substantially complete. Once the asset is substantially complete, further borrowing cost is charged to P&L account. Further borrowing cost is charged to P&L account. Next point, question number 1, point number 4. The company has taken a loan for meeting the requirement of liquor business. Oh my God, such a bad business. It takes a period of few years for brewing the liquor, that is the manufacturing process. So liquor is a qualifying asset. Loan taken for a qualifying asset. Loan is taken for a qualifying asset. It included all cost of brewing and interest on loan in the valuation of inventory of liquor. So the answer is accounting treatment is correct. Loan on qualifying asset will be capitalized. So therefore the accounting treatment given by the company is as per accounting standard 16. We'll practice one more small question number 2 there. A Limited has taken a loan of rupees 500 lakh for the upgradation of its plant. Out of the said loan, 350 lakh has been spent on the plant during the year and balance 150 is used for general working capital requirement. So the ratio is 350 is used for plant and 150 is used for working capital. The total interest cost is 70 lakh. Interest is 70 lakh. So what I will have to do, I have to apportion that interest in the ratio of 350 is to 150. So please tell me 350 divided by 500 into 70 is how much? 49 lakh. 49 lakh can be capitalized. But this portion which is for working capital, this comes to 21 lakhs will be charged to profit and loss account. Will be charged to profit and loss account. Any query? Is this answer right? 49 lakh capitalize. Tanya is right. And 21 lakh will charge to P&L account. Next question number 3 below. Question number 3. A Limited has taken a loan of 20 lakh which has been used to buy trees. Average maturity of the tree is 3 years. So in this example, tree is a qualifying asset and the loan is taken for production of a qualifying asset to be sold as timber in 3 years. Company wants to include the interest cost for the entire period of 3 years in the inventory cost of timber. The answer is comment. The treatment is right. Treatment is correct. Treatment is as per AS 16 because the borrowing cost is incurred in relation to acquisition, construction or production of a qualifying asset. So accounting standard 16 allows you to capitalize the borrowing cost, right? So with this wonderful chapter is over. I have taken variety of questions in the classroom itself and I request all the students to practice this question as homework. Also practice other self-practice questions. Given the time constraints in the classroom, we have to take limited number of questions and the student will have to practice more and more question in the homework. Now you will be able to solve those questions. So thank you very much. Bye bye. Take care.